Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar hit and bounced off a 2-week low towards 68.45.55. A key support level, as you can see, as many attempts have failed and a few times have shown good bullish return from the last time we witnessed in early May and also back in early June. Let's see if the market can repeat this pattern. Given by the technicals, I feel there is a potential to easily see a move back towards the region of 69.35 to 70 cents and reassess from there. The market's been relatively weak for euro, however, with the recent pause in the RSI decline, may actually find a little bit of momentum returning in front of that level of 104.1015. The euro-dollar bears won the battles mentioned during Wednesday's session as the ECB President Christine Lagarde spoke with US Fed Chairman Jerome Powell, and along with that was the Bank of England's Andrew Bailey at the ECB's Central Banking Forum in Portugal. US Federal Reserve Chairman did say that there was no guarantee the central bank can tame a runaway inflation without hurting the job market. He went on to say that there is a risk we could go too far, or certainly there's a risk that the bigger mistake, that is, let's put it this way, that we could fail to restore price stability. Either way, the dollar index did manage to rebound and climb above the 104 and is staying there at the moment, but looks a little bit wobbly. As long as we maintain above 104.10, then I feel the market can rally on towards 104.75 to 105.35 and reassess around that region. The pattern for dollar yen is still maintaining to a potential blow off top or a rally that could be seen as an exhaustion gap. That is when the market gaps higher and then eventually gives it all back. But we do need to see the peak reached or rejected around that 138, 139. But with the given divergence that's clearly here. Overall, though, if we get a break of 135.65, that would initiate a downward move towards the key point at 133.70.90. Either way, though, I still feel the bears will win this challenge, given the divergence and given the fact that the market is a little bit overstretched. I'm not getting that negative when it comes to the British pound, that is. When it comes to the Bank of England, speaking from the European Central Bank Forum, the Bank of England governor said he's leaving all options on the table, including a bigger 50 basis point rate hike, that is, to tackle the 40-year high inflation. The market is very well aware that the Bank of England could actually raise rates beyond 50 basis points to maybe 75 basis points and match the US. However, Andrew Bailey did warn it leaves options on the table, which is very deliberate and wants people to take the message as we respond to the inflation shock. And we want options on the table, that is, in case we have more to do. From the given pattern, I feel that we could easily snap higher, and therefore looks towards the region. It's recently called at 124 with the immediate target around 122. The bullish call holds as long as we maintain above 121.10. Sterling CAD finding momentum in front of the support levels seen around 156.1020, and while intact, let's see if we can clear the level of 157.25. If cleared, that should put further momentum in the step and see a rise up towards 157.90 and on towards the region of 158.70. Finishing up with gold, the market is weaker into the European session. A slight trend coming through here that supports a bear case, and the technicals are still negative. I'm not giving up on the market in terms of the bear case, and therefore looking towards 1,810 to retest further to the downside to 1,800 figure 4 area and reassess from there. The key point, however, is seen beneath at 1,788 to 92. Any rally would see resistance around 1,828 to 1,838 to 42. Wrapping up with oil, we've got a bearish candle here. There's two ways of looking at this candle. It's seen either as a bearish outside range day or an engulfing Japanese candlestick. Either way, we wait confirmation. Now, that is a break of 107 would put the market back on track to tackle the support level all the way down from 103.60 to 101.80.90 as an objective. But we do need to see that confirmation of 107 to support this outside range day. Like we saw back here, we saw an outside range day and another outside range day that fell all the way. That gave us good indication, but we need confirmation to support this one. So 107 gives us the downward move to 102. On the top side, resistance comes in at 110.40.55. That wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.